a very reputed company in pharmaceutical export. Granules India performed exceedingly well during the last 3 years, even registering an EBITDA of more than 26% at the height of COVID, a company with solid balance sheet. Unfortunately, market subjects it to such a high pressure that the share price collapses between December 2020 and March 2021 and brings down the price from 383 to 320, causing it to fall 16%. And the reasons and the dynamics behind the crash is the topic of this video. I am Vittal Prabhu, presenting the weekly video on Stock Learning Simplified. Hope you will like it. The success story of Granules started as a single paracetamol manufacturing facility. Today, it has reached the whole world as an integrated pharmaceutical company. India's share is just 14%, predominantly export-oriented unit, and a company with a diversified portfolio, great reach globally, with cost efficiency and profitability. Company's product mix decision based on contribution to profit has paid rich dividends. Company has shifted emphasis from PFI and API into fixed dosage, which is more profitable, and today fixed dosage occupies more than 50% position in the overall product mix to the benefit and profitability of the company. The synergy between growth rate of finished dosage and the standalone profits and group profits have been a good news to the company, while finished dosage has shown a CAGR of 30% over 5 years. Standalone profits and group profits have exceeded that, and they are around 35%. Success of the strategy is success of the company. Company's growing profitability has been amply rewarded by the market. In March 20, the company closed 2 subsidiaries and reported substantially high profits, and which was supported by the market with volumes taking the prices very high. And similar thing we could see in March 21, heavy volume driving the prices up, means the market has recognized the company's competence and ability to report genuine, good and consistent profits. Operational success has helped the company build up free cash flow year on year, except in FY18 when, due to build-up of receivables, 1 year was a negative cash flow from operations. But normalcy has been restored subsequently in 19, 20 and 21, and consistent and continuous surplus from operations has helped the company make its balance sheet more stronger, more disciplined and more trustworthy. Balance sheet is all smiles, a growing net worth, a receding debt, return on capital employed reaching a high of 25%, and debt reduced to the extent of 18%. Balance sheet of strength and sturdiness. Granules has benefited a lot from a significant transformation in the quality of promoter holdings, which was 53% in 2017 with a pledged component of 42%. With the change in 2021, the promoter holding has come down to 42, but its quality has become exceedingly well, with 39% free shares and pledged shares are a minuscule 2.9. This has got a very, very positive impact on the public perception of Granules as a wealth creator for shareholders. The impact of growing profitability and improvement in the quality of promoter holding is quite evident in the market capitalization, which has moved since March 20, almost doubled from 3,600 level to 7,500 level, and even the PE multiple is gradually improving, and it is a good news for the promoters and also for the investors. The success of the company has attracted controversies too. September 2020, there was a news item of stake sale with parties involved being KKR, Bain Capital or Carlyle and Blackstone. Company did not respond and the share price moved sideways from 328. Then came 27th November 2020 when the price moved up to 412 on the news that Carlyle Group will be acquiring Granules for a consideration of $1 billion. Once again, neither the company nor Carlyle came out in open, either confirming or denying it, and that led to a big crash in the price, which successively fell for over 4 months before going sideways. And then in July, the price started moving up once again based on rumors on social media that some PE investors are taking stake in Granules. Fortunately, this time company had an exchange filing calling the message as utterly malicious, but the damage was done. There was a crash in share price from 367 to 326. The most vulnerable point in all these things appears to be the shareholding pattern of the company. The unique feature of the shareholding pattern is of the promoters holding 39% free and 2.9% pledged. A major chunk, that is almost 34.8%, is held in the name of a single individual who is the key promoter or chairman and managing director. This particular status has been manipulated to float rumors on takeover by the interested parties in the name of succession issues. Based on price action data, average price has moved from 356 to 328, a negative, and the total traded quantity moved from 28 lakhs to 14 lakhs, a fall of almost 50%, another negative. And taking the delivery percentage, moving from 23% to 36%, increase, suggesting absence of speculation. And when it comes to average quantity per trade, 84 to 71, a negative, suggesting no big players involved affecting the movement of prices. On the whole, when the price and quantity both are falling, reversal is always expected to be closer. Movement over 3 months suggests the price fall is not supported by increase in the volume, which has been continuously falling, and this lack of synergy in the momentum between price and quantity suggests the price fall is not sustainable. Price movement starting from September 19 at 95 gives a broad indication. Around 307 is a strong support level, and incidentally this is the level of 61.8% Fibonacci, and the current price level being 327, we find a strong resistance at 365, which happens to be 78.6% Fibonacci retracement, and 438 was the 52-week high. The support at 307 looks very promising for an upward movement in the near term. Option chain for the month of October with the ATM of 325, support of 320, 330 is a multi-parameter level with the resistance, total build-up, and also major change in open interest acting as a strong resistance. Pain gain point appears at the level of 320 with a upward bias, bullish, and the premium is moving higher beyond the level of ATM at various price points, suggesting higher levels of bullishness to be most probable. Granules India, pledged portion of promoters holding down to 3% is a great achievement. Growth momentum with focus on high contribution finished dosage is a good idea. Frequent rumors on sale has spoilt the market price of the company. Clear vision and strategizing has been to the credit of the management. Sound health, impressive profitability, and a solid balance sheet. Bullish moves are available from a plain reading of the technicals. Company has got a strong product portfolio and a geographic reach. Hope you liked the presentation. You can access similar informative videos at InfoCard on Stock Learning Simplified. We look forward to your like, share and comments. If you are visiting the channel for the first time, may please subscribe to the channel and press the bell icon for timely intimation on weekly videos. Thank you so much for your time, attention and interest. This video is for purpose of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Please seek the advice of a competent professional based on your requirement.